Cathie Wood sees enormous arbitrage opportunity. One must have seen Cathie Wood still sees Bitcoin hitting $1 million by 2030 as the current crisis will have the token coming out of this smelling like a rose, or Cathie Wood's adds to holdings in Coinbase, other crypto stocks, amid FTX fallout. Well, that's how Cathie thinks, and people think it's absurd to think the way she does, but she's proved it time and time again that her research pays off, just like back in 2019 with Tesla. She believed Tesla could expand the market tenfold with a cheaper EV, and it really did. Will the same happen again? What does Cathie see? Let's find out. The last few years have been unpredictable for Cathie Wood, with her ARK ETFs, which in 2020 and 2021 will encompass innovation, space exploration, genomics, fintech, and robots, among other subjects. The CEO and Chief Investment Officer of ARK Invest couldn't fail. She was front-page news and a highly sought-after speaker at conferences and business news programs. 2022 hasn't been very generous with her money or her fame. The flagship ETF of Cathie Wood's, ARK, is currently down 59.53% year-to-date and trading for $33. Although being down 59.53% is undoubtedly eye-opening, it's nothing in comparison to some of the equities in her portfolio, which are down 88 to 99%. But throughout it all, Cathie has maintained her faith, increasing her bets, putting more of her own money into her funds, and standing up for her company's thesis and convictions regarding how the world is changing thanks to digital platforms, Web 3.0, the metaverse, green technology, and innovation in general. Whether you agree with the future Cathie Wood and her team see or not, listening to her will make you much smarter and more inquisitive. She's one of the most exciting figures in the investing world today. Cathie mentioned that many public sector companies are significantly down, which has led her to relocate her new investment fund into the private sector, where she thinks there are currently more prospects, in an interview with Harry Stebbings for the 20-Minute VC. The best moment to grow a portfolio, however, in Cathie's opinion, is despite the current drop in the value of investments. She even asserts that if she were an outside investor, she would not sell her own stock. Cathie thinks that building today is crucial since the future is so promising. So we're very data-driven, very research-driven, and so many people ask me why I have such strong conviction. How could I have such strong conviction when these stocks are down that much? And it comes directly from our research. And if you don't think we're, double-checking and triple-checking our research and our assumptions going into the research, and basically our clients and the social world is helping us battle test those assumptions. As you're aware, ARK Invest, an investment management firm, has only been concentrating on disruptive innovation since February 21, when its strategy reached its peak. Accordingly, their approach has been rendered useless since the year 21, along with any innovation strategy, and more growth strategies are currently getting dragged into this. Additionally, we're witnessing down rounds elsewhere as well. Instacart is currently at about 30% of its peak. We're currently experiencing a downturn, and Cathie enjoys launching new ventures and building her portfolio during these times. She believes it could be a series of large drawdowns in the private world that have already occurred in the public sector since we're still in the early stages of development. The fund ARK Invest has now introduced a public-private crossover fund. Of course, in order to increase liquidity, they hope to get it to about 75% private and 25% public at maturity. However, they're not there yet, therefore getting close, but they will keep going if flows start coming in to use public stocks, since Cathie believes there is a small amount of arbitrage and opportunity here. Additionally, they're participating in downturns in the private market at the same time. Because of this, Cathie also believes she should make it plain that the private markets value innovation more accurately than the public markets do. Several ARK equities have experienced 80% declines. Some have decreased by 90% since their peaks, which is really absurd. And Cathie believes that's because these stocks aren't included in the benchmarks. And she mentioned how the traditional world, during a risk-off phase, sells its stocks and moves back near to its benchmark because it believes that's where the safety lies. If everyone is shoving into them, then perhaps it does. Cathie says in the next several years, if they're right, they will see disruption. When their stocks decline by 80% to 90%, assuming they're correct, they estimate a higher overall rate of return over the following 5 years, thereby focusing on that goal. Cathie doesn't view inflation negatively since she's optimistic. The so-called base effect will produce some inflation in this area. Although it appears that we're experiencing inflation now because prices last year were dropping, and she believes this will pass fast, and that the deflationary forces at play in the economy will surprise investors. Positive deflation is one of those forces. Innovation, which exhibits good deflation, exhibits a falling cost curve. She feels that companies that pay too much attention to shareholders, who are just interested in the short term and who want their profits now, are associated or will be associated with bad deflation. They increase their debt in order to buy back their shares. Their products would eventually become obsolete since they paid dividends and did not make significant investments in innovation. and lower prices will be the only way they can pay off their debt. Cathie says they wouldn't be selling their stocks if the world and our research are accurate. The world hasn't changed, and they have simply entered a risk-off period with inflation and interest rates as the reason, and this moves back towards benchmark stocks as the reason their stocks are going to be dumped. During risk-off periods, Cathie averages down and focuses her portfolios on the stocks with which they have the greatest conviction. In this risk-off period, Cathie further condensed her flagship portfolio ARK, which has gone from 58 companies to 32 or 33 names. However, we usually reach their lowest point around that time. Cathie back in 2019, while backing up Tesla, said it would give out tenfold, while everyone in the traditional asset management world was saying, well, this firm is going bankrupt and has run out of money. You'll find a group of shareholders who will purchase into any secondary offering if you look at the highly devoted shareholders on the front page or the first page of holders. Therefore, that was entirely accurate. That's how Cathie currently feels about the stocks in their portfolio. The biggest potential flagship in the portfolio is certainly Invitae. The CEO at the time, Sean George, couldn't take the idea of terminating his initiatives, so to speak. And their confidence in that situation is now as strong as ever. Nevertheless, he's also invited a guest from Amazon. For many years, he'd been at work together. Cathie believes that they've streamlined their operations and are on their way to becoming one of, if not the most, significant molecular diagnostic testing companies. Additionally, she considers Freedom to be a rival in the private sphere, and that it's one of their primary holdings. In reality, as ARK approached the top in 2021, several of their equities started to decline under our required hurdle rate of return over a 5-year period. The percentage for the public portfolios is 15%. Additionally, they did not increase earnings or valuations as they declined below that 15% threshold. The stock was being sold by ARK. One of the most significant semiconductor businesses for artificial intelligence exists there is NVIDIA. Since the beginning of ARK, they've owned it but have just sold it off because everyone in the market wanted an artificial intelligence chip company in order to check a box for their clients. The index included NVIDIA. As a result, it was a much safer investment than some of the other equities, and they increased the valuation to absurd levels. As a result, they sold, especially since they were focusing their portfolio on the names in which they had the greatest conviction. In the end, they sold off NVIDIA to only re-establish their position recently, after it took a tumble. Cathie believes that this concentration method, which requires them to sell 20 or so odd names in order to reduce their list of names from 58 to 32 or 33, is one of the reasons why they are. She frequently tells her analysts when it comes to innovation, we have the world's top analyst team. They do this because their tasks are divided up by technology rather than by sector or industry, and because they want technologies to grow, market, and reach mass market levels. Their technology specialists are also industry generalists. Therefore, technology must cross sectors in order to achieve that. The content in this video is for educational purposes only, and hence should not be considered financial advice. Do conduct your own due diligence and consult your financial advisor before making any investment decisions. We've reached the end of today's video. We'll see you in the next one. Take care.